Hi, this is Alessio Rastani. I'm leading trader. Hope you're well, and welcome to this fresh update on the stock markets. And in this video, I want to take a look at the chart of the S&P 500 or the US stock market. Now, this chart I'm showing to you here is by far one of the most fascinating charts you'll find about the stock markets. Now, you're probably thinking, well, hang on a second. What is so fascinating or interesting about this chart of the S&P? Surely there can't be anything that is particularly interesting about this chart. Well, let me show you this. Take a look and cast your eyes on something very interesting right here. In fact, let me just zoom in here so you can see it very clearly. So you see, guys, what I'm pointing to on this chart right now. Firstly, notice this is the peak that the S&P made, the previous highs the S&P made back in January, before the major collapse, before the major drop we had, as you may remember, towards the end of January. Now, what you can see on that chart is something very, very fascinating. And there it is. That is what's called in technical analysis as a gap, or more specifically, a gap down. A gap down, in case you've not heard that phrase, is essentially, first of all, let me just point it out to you. There it is. That's a gap down. So a gap down essentially is where the opening price of the next day, so the next day's opening price, is lower than the previous day's closing price. So the next day's opening price is lower than the previous day's closing price, thus producing what we call here as a gap down, or a down gap, whichever you want to call it. So what is so interesting, you're probably thinking, about a gap down? And by the way, you'll notice there's a couple of more gap downs here. There it is. That's a gap down. And there's another one here for you. Another gap down here for you. So what is so interesting about these gap downs, right? Okay, so what I'm about to tell you right now is by far one of the most fascinating, and yet you might think one of the most mediocre things about the stock market. You see, guys, in the whole history of the stock market, from the inception, from the first day of the stock market's opening, going back decades and perhaps over a century now, from the first day of the stock market, there has never been an occasion when a gap down like this has not been filled. In other words, from the inception of the stock market, all gap downs have always been filled. Now, let me just let that sink in for a moment. So first of all, what do I mean by being filled? You're probably asking. What we mean when we say a gap has been filled is when the stock market essentially at some point goes back up, and then fills that gap. All right. So let me just explain this to you with a very quick example. So as you will see here, notice that let me just bring this chart up a little bit here. And by the way, in case you don't like looking at charts which are bar charts, maybe you like candle charts, there you go. That's a candle chart. But I find it a bit easier when I look at a bar chart. So here's an example of what I mean by a gap being filled. So here's one example of a gap down. Let me just expand that. So notice that the next day's opening price is lower than the previous day's closing price, hence producing what we call a gap down. And we say the gap is filled when the price at some point goes back up, and then, in other words, fills that gap. In other words, it goes the distance of the gap, as you can see, it did on the very same day. So another example would be right down here. If I just bring this up a little bit. Okay, here's another one. So you can see there's a gap down here. Again, also in January this year. There it is. Opening price of the following day is lower than the previous day's closing price. And you can see on that very same day, the price rallied and actually, as a matter of fact, filled this gap that you see here. There's only one problem here, guys, which is that the gap that we formed back in January, when this initial crash occurred, when the initial drop occurred, this gap here has not yet been filled. And this gap essentially is from about 28, just slightly above 28.50 to down here, just near the 28.30 range. Again, guys, let us just remind ourselves that fact. The fact is that in the whole history of the stock market, there has never been a situation when there's been a gap down in which that gap has not been filled. All gap downs, to be more precise, all gap downs have always been filled. And again, that is not so surprising when you think about it, because stock markets have generally been rising have been rising from the day one of the stock market. So that just makes sense. So gap downs have been filled, and therefore we're expecting at some point for this gap down, for this gap here to be filled. The question is when? When are we going to fill this gap? The interesting thing is, guys, that actually we came very close to filling this gap just about a few days ago, or I should say about a week ago. So let me just zoom out again on this chart so you can see this clearly. So you can see we came close to filling this gap on that bar over there, and that was the gap we were trying to fill right there. Except we did not fill it completely. All right. Now, maybe we're being a bit too precise, but the fact is it did not fill that gap. And that is a bit of a surprise because it came so close to doing that. But again, remember, guys, if this pattern is going to repeat, which we expect it will do, and if all gap downs tend to get filled, then the question is, when are we going to fill this gap? Is it going to be in the next few days or weeks? Or could it be much longer than that? Now, I personally think that given the fact that we are still in a short-term uptrend, we are indeed in an uptrend in the stock market, I expect that this gap over here, this gap down, will likely get filled by the end of August, or I should say by September. I don't think it's likely, given where we are right now, given the uptrend we've had so far in the stock markets, I don't think it's likely that the markets are going to say, well, you know what, forget this gap down, and we're just going to continue going lower and lower. No, I don't think that's likely. So the question therefore becomes, when are we going to fill that gap? Are we going to have a little bit more, perhaps a bit more downside action, perhaps a bit more pullback, perhaps a bit more retracement before we go up and fill that gap? Or will it be much more quicker? Will it be much more quicker in the days to come? We're going to go and fill that gap. Bottom line is, guys, that I expect that gap here, I fully expect this gap here to be filled potentially by August, by end of August, or perhaps by beginning of September. All right, guys, so that's the big thing. That's the big question we're asking right now, and we'll find out very soon, I think. All right, guys, I hope this video helps, and if it has, please give it a thumbs up, and I look forward to seeing you guys in the next video update. Thanks a lot.